Singapore's core inflation has risen to a near 15-year high, primarily driven by higher consumer prices and the GST hike. It hit 5.5% last month. That is the highest since November 2008, but lower than market expectations. Headline or overall inflation edged up to 6.6%. A steeper increase in the price of prepared meals fed higher food inflation. Retail clocked a faster pace of price increases for things like clothing and footwear. Services inflation picked up on higher outpatient and tuition fees, while accommodation edged up due to higher housing rent. But electricity and gas inflation fell 5% on smaller increases in the tariffs for households. Private transport inflation, meantime, also easing as car and petrol prices rose at a slower pace. The government expects core inflation to remain elevated for the first 2 quarters of the year before noticeably slowing in the second half. Analysts are divided, though, over what they think the central bank will do next.
Going forward, we could potentially see further moderations in headline CPI inflation. The GDP growth, however, has slowed down quite significantly. With downside risk to GDP growth, global momentum is slowing down, and the inflation likely to ease. I think the likelihood of MAS further tightening monetary policy has declined significantly.
Given that inflation remains quite elevated, we think that the MAS will likely tighten again in the April meeting. That would be the 6th consecutive tightening move. So we expect the MAS to recenter the band upwards, and that would likely really be to fight high core inflation.